Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Joe Brown of Heresy Financial. Thank you very much for coming on the show, Joe.
Yeah, thanks for having me.
Yes. Okay, so this is your first time on the show. Go ahead and give us 2 minutes on your background, how you got into your YouTube and finances and everything.
Yeah, so I was a stockbroker for about 5 years, and when I first started off, it was really exciting for me. I've always been very curious, so I liked doing a bunch of different things to discover how the markets worked. And about halfway through that 5-year period, I started getting really interested in economics and macroeconomics and how the whole system works.
Okay.
Realized that, kind of inside the belly of the beast, nobody really understands how things work from the outside. So had to start doing some reading and got introduced to like Austrian economics and things like that. And so it just got to a point where I had always wanted to start my own business, and so I decided to leave and I started doing something like blogging and a YouTube channel and consulting and things like that. But then my YouTube channel kind of blew up first, and so that's what I focused on. And so now it's just trying to get real financial education available to everybody.
Yeah, well, you do an excellent job of it. I love your videos. Your editing is amazing.
Thank you. My team is good. That's not me.
Okay. Okay. What do you see? So with the stockbroker background and everything, you watch the Fed. I'll use this joke again, like a hawk.
Yeah.
What do you see the Fed doing with interest rates? How do you see interest rates playing out?
Okay, so when 2020 started, going into 2021, the Federal Reserve was saying, hey, we're not going to thinking about raising interest rates because they didn't see the money printing or anything causing inflation.
Yeah.
Even though a lot of us with, just rational, logical minds on, we, kind of saw like this is going to cause some pretty major inflation.
Yeah.
None of the mainstream guys saw that, and so they were pretty sure they would be able to hold interest rates low. And the whole market believed them too. Like all the big banks, they bought up a bunch of U.S. Treasuries and a bunch of debt at really, record low interest rates. And then inflation kind of became embedded.
Yeah.
I think it scared the Fed because ultimately, at the end of the day, they know if inflation gets away, that's the death of the dollar.
Yeah.
So they knew they had to get in front of that. And so, pretty much within the course of a couple months, they flipped their entire script and said, okay, we're thinking about it, we're talking about it, we're going to do it soon, now we're going to do it. From that point on, everything the Federal Reserve said they were going to do, they've done, and it's been contrary to what the market has thought they were going to do. So at that point, everybody said the Fed can't raise rates, they can't tighten, you can't taper a Ponzi is what everybody was saying. And they have, and they did, and they stuck with it. Not only did they keep on raising rates for way longer than anybody thought they could, but they went up way faster and have gone up way higher than anybody thought they would. And still to this day, the market consensus is, hey, they're going to pivot, they're going to reduce rates, in 2024. And just now, this is in the last couple of weeks, markets have started to adjust and now price in, hey, maybe we got higher rates for longer.
Yeah.
Maybe the Fed's not lying when they're saying they're going to hold rates higher. And so I think unless something drastic changes, they're going to stick with what they have been saying they're going to do, which is holding rates higher, maybe increase them a little bit, and they're not going to be dropping them. The kind of the scary part about that is that long-term interest rates, which the Fed doesn't control, those are going up a lot faster now. And that's the market kind of pricing in embedded inflation for the long term because of the government's deficits. And so that's happening right now as well. But I don't think unless anything, absolutely crazy happens, we're going to get lower rates anytime soon.
You mean like a black swan of banks failing consistently every...
Well, yeah, but even then, they have a couple little isolated scalpel-like tools, like they opened up the BTFP, a couple things like that, so that if a bank fails, they can make sure the depositors stay whole without printing money for everybody, and without lowering rates for everybody. And so that's kind of been their approach over the last year is, hey, if something happens, we'll do damage control as isolated as possible so that we don't cause stimulus for everybody else.
Okay. And what are your thoughts on, so I would assume then that betting on something like TLT,
Bad bet.
That was my question. Yeah, okay. Is that a stupid bet, or is there some merit to that?
Yeah, so this is a contrarian opinion because right now TLT is experiencing massive inflows. I think it's going much further down. Because if rates go up, bonds go down. And so TLT holds long-term bonds, so if rates go up, that continues to fall. So you're sitting at about 50% losses from its high back in 2021 right now. I think that's only going to get worse as long-term interest rates will continue
up.
to rise,
Yeah.
because the government's not slowing down its spending anytime soon,
Okay.
and nobody's coming in to lend to the government,
Yeah.
so they have to pay higher and higher rates.
Yes.
So that drives bond prices down.
Yeah, and countries like China and Japan, they're
Yeah,
selling off.
Exactly, yeah.
Yeah.
Yeah, the Fed is selling off, China's selling off, Japan is selling off, so all the big lenders, they're not
Yeah.
lending anymore.
Yeah.
And the government's just borrowing more and more.
And to incentivize people to get more, the rates have to go up or no one will buy it.
Right.
Okay, all
Yeah,
right.
so eventually it just sucks money out of the stock market.
Yeah.
That's where the money is, so they have to pay high enough rates so that valuations don't make sense anymore. That money gets sold and goes into treasuries.
And goes into treasuries or bonds, okay. All right. Okay, now, wrapping up, what is your favorite commodity for the next 18 to 24 months?
That's a really tough one. So I don't know if I could pick a favorite, but I
Okay.
can pick a top three.
Okay.
The top three would be gold, silver, uranium.
Oh, interesting. Okay.
So gold, simply because it's a safe haven asset.
Yeah.
For 5,000 years, it's maintained its purchasing power over long periods of time. Doesn't matter the government, doesn't matter the religion, doesn't matter the culture, doesn't matter the continent. Like,
Yeah.
it's survived.
Yeah.
It will probably survive into the future,
Yeah.
maintaining that purchasing power. So it's a safe haven asset. And if you look at how it's held up in the face of rising real interest rates
Yeah.
over the last year, it's insane. Nobody would have expected that. You would have
Yeah.
expected gold to sell off like crazy,
Yeah.
and it hasn't. You're seeing growing interest around the world from like central banks to put their money in something like gold, because treasuries, they're 50 cents on the dollar
Yep.
right now, and
Yep.
so
Yep.
you're seeing a lot of attraction to gold right now because of that. Silver as well kind of rides that wave. It's
Yeah.
more of the value is more derived from its industrial value rather than its monetary value today.
Yeah.
But it's still, from a couple fundamental factors like just basic supply versus demand,
Yeah.
looks fairly undervalued. So I would anticipate a good price rise from that in the coming years. But uranium, man, uranium is the big one, I think, that has the most potential for like gains rather than just like a safe haven asset.
Yeah.
We're seeing a couple of things now. It's just I could talk about this for an hour, but
Yeah.
number one, the popular sentiment is shifting.
Yes.
So 5 years ago, 70-80% of people were against nuclear.
Yeah.
Today, it's like 45% of people are against nuclear. So it's shifted just within the last couple of years.
Yeah.
The main reason for that is education. You go look up what are the real problems with nuclear energy. There's a lot of mainstream left and right, independent, libertarian. The political background is actually agnostic on this issue.
Yeah.
People are waking up and realizing, oh, it's clean, it's green,
Yeah.
it's energy dense, it's safe, it has less deaths per year than any other energy production by far. Like, more people die from installing solar panels on roofs every year than people have died from nuclear energy in the past 30 years.
Yeah.
And so, yes, we have had the 3 accidents, but you zoom out from that and put it all together, it's way safer.
It's nothing.
We've solved the waste problem
Yeah.
with deep storage. People think, oh, that's not solving the problem, it's just delaying it. It's like, no, that actually solves it. It's the only energy production that sequesters its emissions rather than all the other energy production. It gets leaked back out into the environment, even solar and wind. And then it's energy dense, and we have growing energy needs all around the world, and it's the only form of energy production that we have the capability to do today that has the density to solve the future energy problems that we'll have, which is exponentially more energy.
Yeah.
And there's very little uranium. And so we are seeing massive demand spike right now. The price has already started to rally.
Yeah.
And then from a technical standpoint, if you're not, if you like charts instead of fundamentals, you can zoom out on the price of uranium. You can see
it's forming a
massive. Yeah, well, there was a massive wedge first, and then it broke out, and it's just been skyrocketing. It's about to, it's probably a little bit overbought right now, but for the future, I think it's it's a good bet.
Okay. That's interesting you say uranium. We got into that a year and a half or 2 years ago, and just dollar cost averaged in for a year and a half.
When volatility.
Yeah,
and now it started to go.
Yeah, and I'm a chart guy too, so I just basically bought on the bottom trend line, and that was it. You know, and now we're starting to think what do we rotate that into? But you think there's quite a while to go.
Well, political sentiment is shifting as well, so that's a big one, that we're starting to see legislation passed to pour money into new uranium production, which we haven't seen in a while.
Yeah.
Globally as well, China's building a ton of nuclear reactors. Governments and people are waking up to the fact that we need it, and so it's. It looks like it's still got some room to run.
Okay. My idiot-proof one was once it reaches $80 a pound, and right now, depending on who you talk to, 73 to 75, something like that.
Yeah.
You know, maybe start trimming the position.
Sure, absolutely. Yeah,
know?
Risk management, profit taking, all of that. Yeah.
Okay, but you think it could have a ways to go. Maybe I'm underestimating how good this could be. Okay, awesome. Well, thank you, Joe, very much.
My pleasure.
Heresy Financial. Thank you for watching. If you want to check out Joe's channel, there'll be a link down in the show notes. Hit the like and subscribe, and we will talk to you next time.